Welcome back. I'm Pratap here. Today is 30 October 2024. In this video, let us evaluate the performance of high liquidity zones generated in the previous report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. All the training lessons are available at our NeoStock YouTube channel. So at our channel homepage, you please click on the tab post. Some of you might be seeing the tab community. Click on the tab. You get access to our free training course. Here you have a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist supply demand zone price action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here starting from lesson 1.1, all the training lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. So from the video description, look for the Telegram link and join at our Telegram channel. It will be helpful to you each time when we release a new YouTube video or any other very important updates we will be providing at our Telegram channel. Now let's get into the analysis of the high liquidity zones. So yesterday end of the day report, we identified 7 high liquidity zones. Unfortunately, none of the high liquidity zones are executed today. In one stock, price entered into the zone, but it did not enter into the fine-tuned area, and after that it came down. Otherwise, it could have been a very good short trade for us, but it didn't went to the fine-tuned zone. Now let's look into the first one, INFY. Why I'm focusing on this? Yesterday there is a dividend adjustment in INFY, around 21 rupees. And this is a 75 minutes high liquidity zone. Generally what happens in the dividend adjustment, price will be adjusted. Because 21 rupees has given to you. So that's why from the market value, rupees 21 will be deducted. With the equivalent ratio, the historic data will be adjusted. Previously we have drawn the zone. At the time 21 rupees above this zone was there. Now the price has been reduced and it has been adjusted accordingly. Otherwise your previously drawn zone was an inaccurate zone. So that's why whatever we have drawn earlier, same thing adjusted now according to the new prices. Because historic data is adjusted. That's why every time when there is a dividend adjusted, whatever the zones you have drawn previously, you need to change the zones accordingly. This is one important lesson everybody should learn, especially when you are using dividend adjustment. Because such kind of headache is there, many people don't do dividend adjustment. I have seen many supply demand zone traders are not using dividend adjustment. That's why they are not getting accurate results when they are doing the trades. But anyway, this is the one I have already explained previously. So directly I am jumping to the 5 minutes time frame. This was the fine-tuned 5 minute zone we have identified previously. And this zone previously we have identified during the live market. Today it is already historic data. But on that day it was a dynamic zone on that day. Previously when we discussed this, I think day before yesterday we discussed about it. Day before yesterday it was a live zone, but the zone was slightly at the above the current price, because today we have again redrawn these zones with the adjusted price. But we are expecting a trade when prices are entering, but today unfortunately the prices were keep on going down and never get a chance to get into this zone. That's why INFY we didn't get a trade. So let's look into the other zones, how I fine-tuned. Few zones I already explained earlier. Same fine-tuned zones only we are using. And L&T Mindtree is one such kind of zone, daily zone. We have already drawn this zone earlier. L&T Mindtree maybe yesterday or day before yesterday. We discussed few days back. If not, at least either on 23rd, 24th October or maybe in this candle. one of these candles. 23rd, maybe our software might have been identified. Either we might have discussed on 23rd or 24th. We have already drawn this zone. This zone is also having a 5-minute zone as an horizon to this entire high liquidity zone. This is also we discussed. This 5-minute zone as an horizon. So that is the reason why I am not explaining. Please refer the old video so that we understand how we fine-tuned this zone. Next one is HR motor. This is also a daily high liquidity zone. I think we did not discuss earlier. No. So this is a rally, 2 base candles and a drop. This is what we have drawn. This I fine-tuned with 75 minutes time frame. Let me explain how. Here we have identified 2 order flows. One is a drop, 4 base candles and again a drop candle. And another one is a rally, 1, 2, 3, 4 base candles and again a drop candle. Rally based drop. These are the 2 75 minutes order flows are available. You may think this is again a drop base, droppy, but this is picked up the orders from this 75 minute zone and came down. It is only a reaction. So that's why my interest is on this area. Now look into the 15 minutes time frame. Here we have 2 15-minute zones are available. One is within this area. Let me hide the candle, you get clarity. See here, failed ERC candle, base candle and then a drop candle. This is the first 15 minutes fine-tuned zone. And this is the another one. Rally, base, drop. This is another 15-minute zone. From here it was a keep on picking. There could be a high liquidity zone here at 5 minutes time frame. That we will see in 5 minutes. So next I fine-tuned with 5 minutes time frame. This is the 5 minutes chart. And look into the order flow here. See here you have a rally, base, drop. And this is currently acting as a high liquidity zone. The reason is multi-testing. This is the first testing, this is the second testing, this is the third test. Here also see here we have a rally, base, drop is created exactly within this area. All these behaviors we will see in high liquidity zones. Here also you see again a rally, base, drop is created within this area. So that means this is acting as a high liquidity zone. Next again within this 15-minute zone we have 2 order flows. One is rally, base, drop. And before entering into this rally base drop, somebody is preventing these prices move up to this area. Who is that somebody? Here you could be a lower time frame zone will be available because this could be a very strong zone. Do you remember previously I told you a new way of drawing the zone? I think few days back, last week only we discussed. You have a leg out candle, you have another leg out candle. The higher wick of this leg out, lower wick of this leg out candle, you can draw a zone. You can draw a zone like this between these wicks. This is the way you can draw the zone. See exactly from here it picked up the orders. See even in this candle also from here, even in this candle also from here. Such kind of zones work very well, especially if they are available within high liquidity zone when you are fine tuning. Do remember between the lower wick and higher wick you can draw a zone. But according to our supply demand zone, if you go one time frame below, you will see a clear zone. Currently which time frame we are? 5 minutes. So if you go one more time frame below, that is 1 minute. So in 1 minute time frame, you will see a clear zone according to our concepts. And that zone works very strongly. That is what happened here. See exactly within this area you have a drop candle, 1, 2, 3, 4, 5 base candles and again a drop candle, follow through candle. This is our theory. Now extend this zone. So this is what I have drawn. Drop, base, drop, 1 minute zone. This zone is tested first time. This zone again close to this went second time, third time. Sorry, here wick to wick missed slightly. Yeah, now this is perfect. This is a 1 minute zone. This is the first test, this is the second test, this is the third test, this is the fourth test. Several times in this area. So this is acting as a 1 minute high liquidity zone. So that is the reason why I have drawn this zone. And this zone is not letting the prices get into this 5 minute zone. Here you have a 5 minute zone. Of course, within this 5 minutes, you have 1 minute zone is also there. You have a rally, 3 base candles, and again a drop candle. That way also you can understand at 1 minute time frame also. But mainly our concentration is on 5 minutes levels, fine-tuned zones. But sometimes we look into 1 minute when some 1 minute zones are preventing the stocks move up or down. At the time we draw the zones. So this 1 minute is not letting the prices get into this fine-tuned 5 minute zone. Now let me move on to the 5 minutes time frame. Now clearly you are seeing. We have a drop candle, another drop candle, wick to wick of these candles. That kind of zone is having a strong order flow. According to our theory, that zone is there in 1 minute time frame. So this 1 minute time frame is currently controlling the prices. So these are the order flows. We have a fine-tuned 5 minute zone. This is a 1 minute high liquidity zone, and this is again a fine-tuned 5 minute zone. Once this 1 minute zone is violated, definitely this will work very well, this 5 minute zone. But anyway, today we didn't get a trade in this zone. Let me move on to the daily time frame. Today price did not enter into the zone. See today's candle. So we didn't get trade opportunity. See, this is the way you have to draw the fine-tuned zones or high liquidity zones sometimes. See how I identified 1 minute zone? By seeing the price action. We know somebody is preventing the prices to move up. With that kind of clarity, you need to draw the zones on your charts, fine-tuned zones or aggressive trade setup zones. 1 minute zone is a aggressive trade setup zone. It is not a fine-tuned zone, but high liquidity zone. High liquidity zones can be used, but the high liquidity zone, not fine-tuned, can be used as an aggressive trade setup. You already learned in lesson 21. Next one is Lupin. Lupin is also a daily high liquidity supply zone. We have a rally, 2 base candles, and a drop. But did I explain Lupin earlier? Maybe in this, yesterday have we discussed Lupin? Okay, anyway, let me explain, because it is just, in case if I explained yesterday, it is the same chart. I haven't made any changes. We have a rally base drop here. Here again you have a rally base drop, the 75 minute zones. Again 15 minutes we fine tuned. Here you have a 15 minute zone here. You have a failed ERs, 3 base candles and drop 15 minute zone. And again here you have a 15 minute zone, rally base, 4 base candles and drop. And again next 5 minutes fine tune time frame, 5 minutes time frame, fine tune 5 minutes. Here you have a drop base drop. And here you have a fine tune 5 minute zone acting as a high liquidity zone. Rally base drop, tested several times here. I think this is, we discussed already Lupin. But today prices did not enter into this zone. Let me go to the daily time frame. Look into today's candle. So this is a today's candle. So we didn't get any trade opportunity. Next one is Muthoot Finance. This is also a daily high liquidity zone. This is a rally, 3 base candles and a drop candle with hidden body. And in this fine-tuned 5 minute zone, in this daily high liquidity zone, we have a fine-tuned 75 minute zone. See here, we have a drop, base, drop. And within this 75 minute zone, we have a 15 minute zone. we have a drop, we have a base, again you have a drop with hidden body. Also see here, you have a pro gap is also there. Today prices entered into the pro gap and then came down. Next we have fine-tuned 5-minute zone and also LTF zone as an horizon to entire daily high liquidity zone. Both we discuss. First, this is a fine-tuned zone. See here, we have a drop, we have two base candles, again a drop. After that, again prices went to this zone and picked up the orders and then again came down. Hide this gap, you get clarity. Drop, base, drop. And this 5-minute zone is an horizon to this entire 15-minute zone, but actually considering this as an horizon is not really a good. The reason is, while this zone formation also, this 5-minute zone, a little earlier it formed. That's why considering this. But this is a fine-tuned zone at the distal line. And it already picked up the orders once. Next time taking a trade in this area is quite risky. But the order flow is very strong. Okay, it may work second time, but quite risky. But here there is a pro gap is there. Today prices entered into that gap area. This is a today's price action within this gap area, and then prices came down. Anyway, it's not a trade for us, but here you have a 5-minute zone. See here, we have a rally, base, drop, follow through candles. And this 5-minute zone is the horizon for this entire daily zone. Let me go to the daily time frame. Here you have a 5-minute zone. And this daily zone picked up the orders and then sharply came down. This is the LTF zone as an horizon to the entire high liquidity zone. Lesson 22 you learned. Lower time frame zone as an horizon to the higher time frame zone. Many times the order flows in that area is very, very strong. So definitely next time we can plan a trade in this area. So this is about Muthoot, but today we didn't get trade. This is the only one stock prices entered into the zone and came down. But in this pro gap area, prices were there in this pro gap area. But we can't take any trade in the pro gap because of the risk management point of view. But after that sharply came. Okay, next one is SYNGENE International Limited. So this is a daily high liquidity zone and it is having a fine-tuned 5-minute zone. Sorry, this is a 75 minutes high liquidity zone, not daily. 75 minutes high liquidity zone, but it is having a fine-tuned 5-minute zone which is tested. But I will show you. We didn't plan a trade in this stock because the fine-tuned zone is tested. See, we have a drop. We have 1, 2, 3, 4 base candles and then a rally candle. This 75 minute zone is having a 15 minutes fine-tuned zone. See, this is the failed ERC candle as a leg-in. You have a base and then you have a rally. And this 15 minute zone, again you have a fine-tuned 5-minute zone. We have a drop base rally. That way you can consider. You can also consider this is the failed ERC candle. See, some of you may consider failed ERC candle. That way also you may consider. And if you do this, if you would have considered and drawn this zone, you are not considering this wick as part of the zone. If it is a drop candle, this entire body we will get. If it is a failed ERC, and consider this is a rally candle as per the dynamic view, still you can draw zone and here the risk will be minimized. But either way the zone is tested. See, even if you draw like this also, see, prices entered into the zone, and after that, see the huge move from here. So this is the reason why the zone is not considered for the trading. Even I have drawn week to week, hoping maybe if there could be some strong order flow in this area. If that is the case, can we consider type 3 proximal to reduce the risk? Type 3 is not tested. Type 3 proximal is not tested. But still risk is there. See, type 3 is not tested. You have a considerable risk is there. Probably in this risk, institutional order flow might be there. If that way, if this risk is within your accepted limit, there is nothing wrong in accepting a trade. The reason is, after prices reached, there is a sharp rejection and a huge move. Let me show you in daily chart, you get clarity. See the rejection, and next again the huge move from this area. By considering that, will there be any order flow in this area? That is one doubt I am having. That way maybe we can consider. Can we consider drop base rally, this one? I have some questions, that's why. Because it is picked up the orders from this zone and the move has started. If you consider drop base rally, there could be some 15-minute zones will be here. This drop base rally, again see huge candle, big candle. Again it picked up the orders. Within this area again go to the 5 minutes time frame. 5 minutes time frame also see the candle. It's a very big candle. It's a failed ERC candle. Clearly it is reflecting. And then rally candle. In between no base candles. When there are no base candles in between, easily in this area prices will be moving down. So by considering all these points in this area, I didn't draw any zones. And moreover, this is the horizon from where it picked up the orders and started moving up. See, this kind of points you should keep in your mind. Just like that, everywhere when zones are coming, you are drawing the zones. Mostly they will fail. If you are a beginner in the initial stage, you will struggle a bit until you get some experience. But why I am explaining all these points? Because these are all learnings for you. Understanding where exactly the real order flow is there. Finding them is the real challenge. Some people will think, okay, we are ignoring some zones, or we are not considering some zones. When I am not considering some zones, there is a strong reason for that. Anyway, today price didn't enter. But how I fine-tuned this zone? Why I did not consider this 75 minutes? Drop base rally. Why I didn't consider? I have a strong reasons for not considering this at all. Drop base rally. First of all, reason number one, it is looking like ERC candle. Okay, even if you ignore and draw compromise and draw zone for fine-tuning inside, still inside you have seen, right? How the order flow, there is no order flow at all in that. But the actual order flow is from this area. Because the order flow is very strong, very sharp from here, type 3 proximal, even if I consider this is not a, 5 minutes time frame. I don't want to consider this as a failed ERC candle. Because see, this is the candle having, why I am saying it is not a failed ERC candle, it is having a considerable amount of the body. Failed ERC candle, the body is very small, not more than 30% of that, 30 to 40%. Maybe worst case up to 40% body you can consider. So almost half of the wick and half of the body is there. And it is the ERC candle. That's why if I consider this as a drop, this is the area in the wick area, you have an order flow still available, very strong. Maybe the order flow is very strong, the movement is very sharp here. See how sharply prices moved from here. That way, those who can bear the risk within this type 3 proximal area, nothing wrong in planning one more trade if the risk is within your accepted limit. If the risk is not within your accepted limit, anyway you ignore this stock. You consider this as a tested zone because the type 2 is already tested. Because there is a considerable risk is there, that's why I am assuming there could be some order flow also might be there. See, whenever there is a risk, there are chances of having order flows. Maybe if you are a beginner, initially maybe last 1 year you are started trading in supply demand zone, ignore this stock. You are an experienced person, maybe last 3-4 years you are doing supply demand zone, you have a good experience. Probably you might have managed a risk a lot. You manage risk management, you got considerable experience. If you feel you can handle this risk, nothing wrong in trying another trade. If our analysis goes wrong, stop loss will hit. Because this risk is within your accepted limit, you will go for, anyway you will bear that risk. In case if the risk is within your accepted limit, otherwise you can't take the trade. These are these kind of points you should observe. This is the way you should doing a very good. If you start doing your trading in this way, you get good experience. Anyway, it takes some time for you to understand this level of mindset. I have seen people thinking, I have 6 years experience, 7 years experience. Still they don't consider these kind of points. They work like a mission. 6 years back, whatever the concepts they learned, that way only they fine-tune their mind. That's it. They won't go beyond that. If you want to become a good trader, your mind should think in a different ways. This is one of the reasons why always I am showing you these HLQ zone analysis videos, so that some of you will be learning. Whoever is watching these videos, at least you learn from my experience. Okay, INFY already we discussed, and the last one is JK Cement. This is also a 75 minutes high liquidity zone, high liquidity supply zone. Previously we have drawn, this is daily high liquidity. This is the one, drop, 2 base candles and drop. This is a 75 minutes high liquidity supply zone. And this zone is already tested, fine-tuned zone. But how we fine-tune, let me explain. Here we have a 15 minutes fine-tuned zone. We have a rally, 3 base candles and then a drop candle. This is the 15 minute zone. Within this 15 minutes zone, we have a fine-tuned 5 minute zone. See, here you have a drop candle, you have 4 base candles and then drop candle. I adjusted up to within this 15 minutes zone. Why I didn't extend? So that this zone is exactly fit within this 15 minute zone. That way I have adjusted. Otherwise a drop, 4 base candles and a drop. And see, this zone is already tested. Prices went deep inside. See, it didn't touch the distal line, but very near to the distal line it went. So deep inside the zone. So that means order flow has been consumed in this area. So that is the reason why planning a trade again in this area might be quite risky. That means it is not a fresh zone. That's why JK Cement also we didn't plan any trades. But anyway, price did not enter into this zone today. Look into the daily candle, you will get clarity. This is our daily candle. So these are the, see, generally, did you observe? In our high liquidity zones, some adjustment will take place sometimes. I am thinking this is the adjustment area because the day before yesterday we got the trades. Day before yesterday we didn't have any trades. Today again we didn't have any trades. In a month, if you see continuously 2 or 3 days like this, some adjustment will take place in the market. After that we get very good trades again. Probably from day before yesterday some adjustment is taking place. Because we have seen in high liquidity zones such kind of adjustments last 1 year. We have seen nearly 5 to 6 times we have seen so far. At the time market momentum also will change, and sometimes market directions also will change. So is market direction is going to change? It's a question mark. See, we can't conclude based on this adjustment. But might be, there is a possibility. That we will understand in the next 1 week time period. So this is about the high liquidity zones. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.